Take it away, Rich. All right. We just want to start out with an exciting chart showing a crazy amount of numbers here. Just for the main point, these are actually production numbers from May through, in fact, the January report. I just want to note here's the November column. And of course, I don't have labels on this. This is just a copy off my main big table. Here's November column. Here's the December column. One thing you'll notice about November and December, all of these are the exact same number. So USDA does not make any production changes on this next month's, on this week's report. So keep in mind that we should not see any major changes for those types of things here. What we will see is some changes on the demand side. So here's ethanol, I have one line here, and it's actually in bold here if you get the chance to look at the actual presentation itself. So we're actually going to increase our ethanol production number here. Now, why are we doing this in the face of all this this expectation with all this concerns about ethanol and the subsidies going on at the end of the year? At this point, USDA's people in this lockup on Thursday night, they will not take into consideration legislation which has not happened yet. In other words, there's too many questions more than answers on this whole subsidy issue here right now. So I'm actually still plugging in a slight increase here for ethanol production because we had great numbers for September and also hearing about great numbers for October ethanol production. Export-wise, numbers are a little lower here. We did have a small jump in numbers for in this last week's report, but overall still a little concerned. But bottom line for corn, same ending stocks here. So we're not going to see any major changes for our opinion, at least on the core numbers here. On the secondary issue we have of this right now, this whole subsidy issue, what I got on here is a chart showing where production will be if we're going to meet just the minimum mandate level. Frank, can you drop the light up here? All these slide up here. And that's the very first bars right here, the light green bars. The second ones I have here are the Department of Energy's own estimates of ethanol production. In other words, I wanted to show that if we take off the incentive off this subsidy, where's the most we could fall in terms of production? And that's just down to this minimum level right here. So I wanted to point out, if we drop the subsidy, it's not going to be a major train wreck in production. So right now, USDA's, or I should say the Department of Energy is saying we're going to run about 13% higher than the minimum level that the minimum mandate says. I think if we take off the subsidy, we'll probably drop about 7% off that level. So we'll only increase 6%. So keep in mind, a net increase for ethanol still is what we have lined up here over this mandate level, 6% over the mandate level. One thing we talked about in the comments on Friday afternoon was that's about a 35-cent drop in corn prices. That'd probably take over about 3 to 4 months. So I wouldn't expect that immediate 35-cent drop right off the bat, but it is something that we could trade 35 cents lower than where we would be if we had that subsidy level in place. So overall for corn, neutral report lineup here for Friday, and we probably won't get a sound decision on this whole ethanol subsidy issue until the end of the month. This is not going to be decided right away here on this one here. As far as stocks to use and just corn pricing, just want to still point out we're still at some very low levels for stocks or stocks to use, whatever measure you use here, and that we're pretty much justified in holding these prices. 525 is the very low end, but more realistically, we feel that especially next few months, if Brian's talk is right, $100 crude, that certainly will carry over into corn. So we're still generally bullish on the corn. Our prediction, our position, we bought 566 and a quarter on the March last week. Still very happy with that position here right now. Over in the beans, main factor right now is this whole export issue here, the fact that we're beating pants off the USDA. In fact, as we talked about last week, in order to just meet USDA, we've actually got to fall below normal. So here's the black line of where we'd have to fall in order just to meet USDA. And keep in mind, we beat USDA every single week almost, except for last week, for weeks in a row. We're doing fine here. Even if we drop to normal level, we're still going to beat USDA. So with that in mind, what do we look at here with these export sales? We're actually increasing ours a very conservative 25 million bushels. Crush is doing great. So look what happens to this ending stock number here, 185 down to 136. That is tight. It's tightest in, I want to say, 4 or 5 years. More important than that nice little quote, tightest stocks in 4 or 5 years, is this nice little quote. Stocks to use, the true measure of tightness in grains, 4.0, the tightest since 1953. Let me put that on the press release. So we're beating 2008, big, importing, exciting year. We're beating 2003, which was also a major problem for South America as well. So I want to point out, we've got the tightest supply, meaning using stocks to use, since 1953. We've got the oomph here for upside potential for soybeans. And I would love to put together a chart of Argentine or Australian wheat production or U.S. plains. I didn't have time to do that here. Just want to point out for Friday's report, though, we don't look for major changes. We do actually will recognize the last couple weeks of sales have been a little higher than we expected. We've got a slight jump in numbers from USDA, so a slight decrease in ending stocks. But overall, as you can tell, whether you're looking at the ending stock number here or stocks to use, we're still not in any panic situation. We're not in any tight supply situation for wheat right now. So all we're trading on with these higher prices for wheat is this very concerning new crop picture. And that's, of course, the U.S. plains, also for Australia, and also for Canada. So we don't look for any major price breaks right now, at least, on this wheat issue here.